Members, good morning. It is past 9:30 and we have a quorum. I call the meeting to order. This is the meeting of the Financial Affairs Panel of the Legislative Council. First of all, let us look at the papers issued since the last meeting. We have one information paper, which is already in the agenda. Number 2, date of the next meeting and items for discussion. In the regular meeting of January, which is going to be on the 7th at 10:45 a.m., the administration has proposed 3 items for discussion. Number 1, subsidiary legislation for implementation of the new companies law or ordinance. 2, proposed retention of supernumerary directorate posts to deal with matters concerning companies and bankruptcy-related legislation. And number 3, the 10th replenishment of the Asian Development Fund. Members, would you agree that we take up these 3 items in the January or regular meeting? If there are no particular views, we will accept the 3 proposals by the administration and they will be listed into the agenda. Item 3, briefing by the Financial Secretary on Hong Kong's latest overall economic situation. We'll invite the administration to come in. The convention is that all other members have been invited to this item, and the administration has already provided us with a paper, and that is CB 1207 12-13-03. And the administration will also be providing a PowerPoint presentation at the meeting here. Mr. John Zhang, the Financial Secretary, will speak, and then Mrs. Helen Chan, Government Economist, will introduce to us the overall situation in our economy and also the latest forecast. Members will be able to ask questions afterwards. It depends how many members would have the interest to put questions. Secretary, when you and your team are settled, please start, and Mr. John Zhang, over to you. Secretary. Thank you, Chairman. I'm here to brief members of the Financial Affairs Panel on the Hong Kong's recent economic situation and near-term outlook. Global economy is still developing at a slow pace and the prospect is uncertain. The euro debt crisis has stabilized somewhat. However, the real economy of the eurozone has actually entered an era of depression. Many heavily indebted countries now have difficulties in resolving their debts. In the U.S., the fundamentals are still weak, and the deleveraging process is still going on. The economic recovery is not for certain, and also at the end of the year there may be this fiscal cliff, and it may add further uncertainties to the American economy. South Korea, Singapore, and other economic entities in the Asian region have also suffered. In the 3rd quarter of this year, the quarter-on-quarter growth has slowed down. Hong Kong is facing a lot of challenges. The 3rd quarter situation is a little weak, and the year-on-year growth has been 1.3%. This is mainly because we have been impacted upon by poor export. Because the demand from US and Europe is slow, there is slower progress in the Asian region as well. The Hong Kong export has remained in a weak situation. In the 3rd quarter, since the basic figure last year was a little low, so it seems there was a little bounce back. However, in October, it eased again. Recent surveys have shown that Hong Kong enterprises still are cautious about export prospect. The entire globe does not have a lot of economic wishes, and therefore there will still be weak export. However, inbound tourism has seen some growth. In terms of the domestic sector, since favorable employment and income conditions are with us, private consumption expenditure in the 3rd quarter also grew. In terms of investment, since there is strong machinery and equipment acquisition in the private sector and also more construction activity, plus the rolling out of public sector infrastructure works, investment in expenditure has increased in the 3rd quarter. All in the first 3 quarters of Hong Kong, the economy is such that export is weak. However, internal demand has remained strong. In the remaining time of the year, the external environment will still be affected by the euro debt and also the U.S. fiscal cliff crisis. However, the mainland economy has a little eased, and there would be some support for the region, and Hong Kong exports can be expected to remain stable. In the past year, income has increased and internal consumption is expected to remain stable. Since there is a lot of construction activity and also inbound tourism growing all the time, there would be some impetus for internal demand. I would expect that there would be a modest growth of 1.2% for the overall economy in Hong Kong this year. In the beginning of the year, when I announced the budget, I said that the economy will ease, and I have rolled out many measures to help SMEs. The labor market has remained more or less stable. However, for a row of 4 quarters, there has been just very slow growth, and there has been some pressure on the labor market already. Hiring sentiments have become cautious, and the overall labor force has slowed down as year-on-year growth is seen. And also, 3.2%, that is a very low unemployment rate for the second quarter. It has gone back to 3.4% from August to October. In May, we rolled out the SMW last year, and there has been some effect, but now it has worn out already. So recently, the growth has slowed down compared to the last few quarters. The medium income and also the 10 decile average income in the third quarter have still seen 5.1% and 5.2% respectively in terms of real growth. In terms of commodity prices, inflation pressures eased further in recent months. Global food and commodity prices have staged an earlier retreat, and also there is now easing inflation. Imported inflation has become less since the beginning of the year. In terms of the local scene, costs have come down because of the economic slowdown. From the end of last year to the beginning of this year, fresh letting residential rentals have eased, and headline in consumer price inflation have come down from 5.2% in the first quarter to 3.8% in October. And the underlying inflation has also come down from 5.9% in the first quarter to 3.8% in October. I believe inflation will be under control in the remaining part of the year. For the entire year, I expect the inflation rate to be at 3.9% and the underlying inflation 4.5%. Europe, US, and Japan, all their central banks have rolled out quantitative easing measures in September. And the local property market has become exuberant. In October, prices have gone up by 3% compared to September. In the first 10 months, there has been a cumulative increase of 23%. In the third quarter, the affordability ratio has reached the long-term average. The administration thinks that property prices may have an impact on the macroeconomy. Starting from early 2010, we have worked in 4 directions in order to roll out measures. One, land supply, suppressing speculation on property, raising transparency in the property market, and 4, preventing excessive expanding of mortgage lending so that we can have a stable development in the property market. There has been a bigger risk of the property bubble, and therefore in August and September we have rolled out measures to increase land and also to increase housing so that there would not be excessive growth in mortgage lending. In October, we also rolled out the enhanced SSD to combat speculation, and also for Hong Kong citizens and people who are not Hong Kong citizens, there is this BSD so that when supply is tight, there will be priority for Hong Kong people to buy property. These measures have yielded good results, and in October there has been less transaction numbers and speculation has been suppressed somewhat. We will keep close watch of the property market. I like to appeal to the public again. Buying property is the most important long-term investment in one's life. Before making a decision to buy property, we must cautiously analyze all potential risks and consider our own affordability. As for the economic outlook for the next year, I am of the view that it will still be a very challenging year. The low growth in advanced economies will continue, and there are heavy debts sustained by certain countries. Macro austerity will continue, and therefore Hong Kong export will be affected. There will still be a lot of variables. We'll have to see whether the U.S. can really weather the fiscal cliff and also whether the euro debt will worsen. If these matters are not properly dealt with, the U.S. economy may again enter a period of depression, and there will be another wave of volatility or shock for the entire world. Apart from the economy, we have to be mindful about the political situation in the Pacific and also the Middle East. There may be more volatility done to the global economy as a result, and that will also be an unstabling effect on the Hong Kong economy. The Middle East conflict has always had a bearing on international oil prices, and in the Pacific, the relationship amongst the countries there will also affect the investment activities and export in the Asian region. Therefore, we must watch the situation closely. However, the mainland economy has somewhat bottomed out, and the fundamentals are still good in Asia. If we can keep this growth engine, it will be good for Hong Kong. And when I read out the budget next February, I will let you know the overall forecast for next year. As for inflation next year, the wages have grown by a slower rate. However, rentals have still risen quite highly.
And the global food prices and asset prices have become volatile because of increasing a global liquidity glut, and these led to the volatilities in international commodity prices and asset prices. And we'll closely keep watch of the situation for the low-income group. And now with the Eurozone sovereign debt crisis still going on, and the external headwinds in the global economy, we will closely monitor the situation, but with the flexibility of Hong Kong's economy and the government's timely rolled out measures, we are able to weather the storm every time, and we will continue to pay attention to the impact, and we will come up with measures to offset the volatilities in the global economies. Now I will defer to the government economists to give you a more detailed analysis of the economy and the outlook of the economy. FS, can you give us the speaking notes in writing? Okay, after making some amendments, I can give you a copy. Right, please give us a copy for members' reference. Helen, please. Madam Chair, there are three parts to today's presentation. First is economic performance in the third quarter of this year. Second part, we would like to present to you the outlook for the remaining of 2013, and lastly, we would like to talk about the low-income households. First, on the economic performance in the third quarter of 2012, in mid-November, we announced the new latest figures, and the year-on-year change is 1.3% growth. It's just slightly higher than 1.2% in the last quarter, and it's the fourth consecutive quarter where we have seen moderated growth. And if we look at the external sector for export of goods, in the third quarter, the results were not satisfactory. In October, as mentioned by FS, the exports have come down. It shows that the demands from U.S. and other countries have remained sluggish. And if we look at this table, you can see that exports to EU markets were the worst. And for the sixth consecutive quarter, we have seen negative growth, and the decline have become double-digit, and it has widened to 14.1%. As for U.S. market, overall speaking, there has not been any growth, but comparing to the previous quarters where we saw double-digit decline, we have seen improvements, and it shows largely that the U.S. economy has stabilized, whereas for the mainland, it has rebounded strongly, and this is a flashpoint for exports in this area. Exports of services, it has grown moderately by 0.1%, and comparing to the second quarter, it has moderated visibly. This mostly had to do with the external environment, and if we look at the green line, which is trade-related services and transportation services in blue, in the third quarter, it had remained sluggish. The other reason why export of services have been sluggish is because of travel services. Because of the worsening debt crisis, there was much volatility in the market, and it shows a very visible decline. And for the travel services in black, in the third quarter, there was a 6.6% growth, but from the chart you can see that comparing to the previous years, where there had been double-digit growths, the growth moderated. It shows that globally speaking, visitors had a worse sentiment. Domestic sector, in terms of private consumption expenditure, in this chart, in the third quarter, there was a growth of 2.8% year-on-year. It was a stable growth. In the third quarter, the labor market remained stable by and large, and the consumption continued to grow. As for domestic market and the domestic demand, investment, there was a growth of 8.7% in the third quarter, and this was mainly due to infrastructure projects going ahead at full steam, and also the private construction projects. Labor market, on the whole, unemployment rate, overall speaking, in the third quarter remained low, and the 3.4% between October and August, comparing to the trough in the second quarter, have seen an increase of slightly 0.2%, whilst in full employment, starting from the third quarter, we have gradually seen a slowing growth in the number of jobs created. According to this blue line, you can see the moderation. Growth has been sluggish for 4 quarters in a row, and this has posed some pressure on the labor market, and we will closely monitor the situation. As for inflation, it has continued to taper. The underlying inflation, if we look at this chart, last year, at its peak, the underlying inflation was 6.4%. By the first quarter of this year, it had declined to 5.9%, and then it came further down by 0.8% to 5.1%. And in October, the rate was 3.8%, a decrease of 1.3%. And comparing to the peak of 6.4% in October, it has decreased by more than 3 or close to 3%. So it shows that underlying inflation continued to taper. Local property market, for the first 10 months of this year, property prices have risen by 23%. For this, according to this chart, the trend for large flats and mass market flats are different. For mass market flats, the growth was 24%, so it grew faster than large flats, 11%. As for the market sentiment in May and June, at that time, the outlook was quite conservative because of the worsening Eurozone debt crisis. But after in August and September, the market had become more exuberant. In particular, in September, the central banks of Europe and Japan, US, have rolled out monetary easing measures, and prices have continued to go up, and the mortgage payment to income ratio in the third quarter had continued to worsen, and this level for the third quarter rose to 50. It showed that the ratio continued to worsen, and comparing to the average for the previous 10 years, we feel that the risk is escalating, and therefore, with the introduction of the enhanced SSD and the buyer stamp duty BSD, we hope to cool down the exuberant market. And initially, we see a fewer number of transactions in the recent weeks and fewer market speculative activities. And generally speaking, the market has cooled down somewhat, but we will continue to monitor the situation and analyze the situation. We talk about the two demand-side measures, but the government also understands that supply-side measures are the most effective ways to tackle the problem at source. And through more land sales, we find that the results have been positive. And for the number of projects, you see that the number has been on the rise. For example, this line in blue, or this notification of commencement of works in red, for the first 3 quarters of this year, the total number of units involved were 13,400, a jump of 87% compared to the beginning of this year. And we hope that the shortage of supply will ease out, and the steering committee chaired by the FS will continue to make its effort. Outlook for the remaining of 2012. As an open external economy, for the fourth quarter, we must pay attention to the external headwinds, and in the coming days we will be subject to the influence of US and EU economies. For exports, mainland accounts for 38% of the total market. It enjoys the largest share, and for the US, EU, and Japan, the total share is 41.2%, so it's slightly larger than mainland. So for the advanced economies like US, EU, and Japan, if they go into recession together, it will have a great impact on Hong Kong, because the three economies account for $33,000 billion, and it's larger than the mainland, and it will have a greater impact on us. And as for the external headwinds, well, the external environment is still quite challenging. Looking at the US economy, on the chart on the left-hand side, the confidence in consumption fared better than expected, but all in all, the pace of recovery of the US economy had not been stable, and the Eurozone debt crisis or the fiscal cliff is an imminent threat, and we need to place close attention. As for the Eurozone economy, the immediate burst of the economy has subsided, but if you look at the the Eurozone Composite PMI and the Eurozone Economic Sentiment Indicator, the situation is still not good, and the unemployment rate, according to the figures announced last week, it rose to an unprecedented level, 11.7%. And the Eurozone economy and the Eurozone sovereign debt crisis will continue to pose a threat in the coming days. Mainland economy growth has begun to pick up, and this figure has risen to above, the PMI index has risen to about 50. As for the manufacturing MPI and the retail, etc., all these figures have shown improvements. And for the series of growth stabilization measures rolled out earlier, we have seen some positive results. For the forecast of 7.5% for the whole year, we see that for the fourth quarter, this will largely be the case. And inflation has continued to come down, and there is more room for the mainland economy related policies to be rolled out, and the economy in the fourth quarter will continue to remain stable, and the economy will continue to growth, and all these have positive impact on the local economy. Now, owing to the sluggish growth of 1% for the first 3 quarters and the decrease in export in October, for the whole year, economic growth has remained low. The latest forecast in October is 1.2%. Inflation. The outlook for inflation. Inflation is receding in October. The inflation rate was 3.8%. So for the fourth quarter, inflation would be rein in, and in this chart on the left, you can see that overall speaking, inflation pressure in relation to foodstuffs, consumer goods, raw materials, etc., for the previous quarters, they have continued to decrease.
In the short term, this is expected to retreat even further. As far as local inflation is concerned, on the right, you can see that wage pressure, the wage pressure has eased as well. In terms of rentals, as the FS has said, rentals have gone in different directions. If you look at the chart on the right, rentals usually would move together with the economic cycles. If you look at the blue line, it is our GDP trend. In the year, domestic rentals, in the chart on the right, if you look at the green line, you will see that the growth has become slower than in last year. In the third quarter, it reaccelerated somewhat, and we have to keep watch of the situation. And if you look at office rentals, the red line in the chart on the right, you can see that it has come down. In the first 9 months, it went up by 6%, but compared to the end of last year, which shown a year-on-year increase of 16%, it has eased a lot. But if you look at the chart on the left, shop rentals are still rising. And we have to see how this would impact on increasing inflation. But our judgment is that in the fourth quarter, inflation would be under control. The overall inflation for 2012 should be 3.9% for headline inflation and 4.5% for underlying inflation. And in 2011, the average was 5.3%. So this year, it is going to be a little less. The 2013 global economy, as the FS said, it is still a year of challenges and variables. We believe that there will be very low growth throughout the world, and it is not going to change in the short term. Certainly, there may be relative improvement. However, there are still huge and immense uncertainties. And the economy next year will depend on a few factors. First of all, whether the U.S. can steer clear of the fiscal cliff. And as you know, the euro debt crisis has yet to be resolved. And whether it will worsen, it may trigger another round of global financial market turmoil. That risk still remains. And the third factor is the poor economy in the advanced economies. In Asia, we can see the impact of the second wave done by these advanced economies. So Asia will still be very much affected by the poor economies in the US and Europe. And then the real economy, globally speaking, is not good. But then the liquidity glut situation has not improved. And in fact, it can deteriorate, especially in September. The three countries, US and the Europe and Japan, rolled out their own quantitative easing measures. And as the FS has always said, this is very abnormal in terms of the external macroeconomy. This will still be plaguing Hong Kong. Our growth prospects for 2013 will very much depend on the US and Europe. But recently, we have seen some positive signs, and that is the economic data for the US have been adjusted upwards, and it seems consumption has stabilized. As for the mainland, as I said, we believe the growth would be stable, and we hope this will continue, and hopefully we can have some kind of improvement next year. The important thing is that US and Europe, they should not worsen drastically, and so that we can maintain steady external trade. But I don't think there is any particular ground for optimism now. We must still have this sense of crisis in our heart. Our forecast for next year will be between 2.5% to 4.5%, or an average of 3.5%. The official forecast will be announced next year when the budget is out. Number 3, low-income households. This is what we are very concerned about, because easing of the economy will have the biggest impact on the grassroots, and the impact on them will also be obvious. That is why we have been watching the situation closely, the employment and income for grassroots. From this table, you can see that the decile, the 10 decile and average income, you will see that in the third quarter, the income has risen by 7.2%, and after inflation, it is 5.2% in real terms. You can see that it has continued to improve. But then these figures only show an average. Individuals might still fall behind the growth of the economy. Therefore, in terms of alleviation of poverty and improving livelihood, the administration must continue to care for these people and also provide assistance to this group of citizens. And now let us focus more on low-income households. In the third quarter, there are 59,800 such households, or an increase of 2,400 households. And now they make up 2.5% of the total households in Hong Kong. Let us look at this chart. If you look at the blue bars and then the black line, which is overall unemployment, you will see that there has been a downward trend until 2008. But then in 2009, when there was depression, the figures went up, and then when the economy bounced back, it came down, and then 2.4% in 2011. That was a 10-year low. And in 2012, the third quarter, it has risen by 1% to 2.5%. It has risen by 0.1%, but it's still at near the bottom in a 10-year period. And you can see that this is in line or is aligned with the overall unemployment rate. Out of these, almost 60,000 low-income households, there are about 120,000 people, and you will see that about 65,000 who are economically active. which is the orange part in the pie chart. These grassroots become low-income households because, first of all, they are unemployed. That accounts for 36%. Or they work part-time, which is 23%. Or they are underemployed, 9%. So altogether, this accounts for 70% of these people. Most of them are unskilled or lowly skilled. Many of them are in retail, catering, security, cleaning industries. Many of them work voluntarily part-time or are underemployed. And since the proportion is higher than the overall population, therefore their income or wages would be lower by comparison. Therefore, they fall into this bracket. Compared to the last year, we can see that voluntary part-time, you can see there is a marked increase. It is an increase of 35% if you look at the number of people involved. And to a certain extent, this reflects that after implementation of the statutory minimum wage, employment has been boosted, and middle-aged women and elderly people are now working. So you see more people working voluntarily part-time. And full-time workers, it has come down by 10%. This also shows that because of the implementation of SMW, there has been improvement in employment income and more people have left the low-income bracket. The administration has always placed a lot of store by the issue of poverty, and poverty alleviation is one of our major policies, and the Commission on Poverty will make in-depth analysis into this issue of poverty, and they are already starting their work. The focus now is that for a row of 4 quarters, there has been subdued growth in our economy, and we see that there is more pressure on the employment market, and this will become more evident in the future. So we have to know whether job creation will slow down so that there will be an impact on the low-income bracket in terms of their employment and income, because when the economy takes a turn for the worse, usually the low-income bracket will take the brunt. That is all for my introduction. Thank you. 8 members have indicated their interest to ask questions, 4 minutes each. These members are Wong Kwok-hing, Sin Chung Kai, Ronnie Tong, Regina Ip, Jeffrey Lam, Chen Kam Lam, Lam Tai Fai, and Wong Ting Kong. Wong Kwok-hing. Thank you, Chairman. Para 15 of the paper says that in the 3rd quarter, the housing affordability ratio has gone up to 50%. In the past 20 years, the average stood at 50.4%. In other words, the property market is still very volatile, and there are still many risks if people want to join the market. There is low interest rate, and plus hot money coming into Hong Kong. The property market has only cooled down a little. So, Secretary, you have introduced a few measures, and you said that the property market somewhat has cooled, but we do not see a lot of evident results. We see that there is still a lot of risks. My question for you is, what more can you do in order to tackle the situation? The Secretary has appealed to the public time and again that we should watch out for the risks. Yes, you may be saying this, but what can you actually do? Secretary, Chairman, we all know in the past 2 years, we have launched measures in every aspect so that our property market can develop stably and healthily. We have rolled out different measures in terms of supply, and they were successful. And 4 or 5 weeks ago, we also introduced measures on the demand side. And we see signs now that transactions have been reduced, and property prices have stabilized. I think the measures are successful. We have to be very prudent in launching any measures. I'll just say that let us be watchful of the risks and will continue to monitor the situation to see what else can be done so the property market can develop in a stable and healthy manner. Chairman, speculation does not only relate to domestic property. There is also speculation on shop spaces and car parking spaces. The interest rate is extremely low, and there is liquidity glut, and people don't know where to put their money. In the circumstance, if you are over-optimistic, and if you rely on the measures you have rolled out to say that they are successful, are you being over-optimistic? Secretary, well, low interest rate is a fact, and I believe it will be here with us for some more time, and therefore we have to be careful. The affordability ratio is 50%, and it is already very close to the average. But the difference now is that the interest rate is much lower than before. If the interest rate should go up, we have done this forecast. If interest rate will go up by 3%, the index will reach 65%, which is a very high figure. The measures we have put out will have to be tested by time, and I believe in time we will see how successful they are.
Mr. Sin Chung Kai. Madam Chair, I'm also concerned about property prices. If you look at Para 17 and the chart, you can see that in the slides, you can see that in the 90s, the mortgage to payment ratio was quite high because of the higher interest rate back then. And we compare this with the current affordability ratio in 2003. Well, it's higher, but it's still lower than that in the 90s. But it's hard to draw comparison because the markets were different. In particular, on page 18, on slide 18, the chart shows the affordability in terms of housing. And comparing to the situation in the 90s, we're still comfortable, but in terms of real housing affordability, it's getting more and more impossible. When we look at new property developments, even if they're in remote areas now, the unit price stands at over $10,000 per square feet. So I think that another method should be used. I don't know if this tracking study really shows the situation over the years. Now, for the new property developments, what about the prices? If you compare the prices for new property developments to the increase in income earnings, I believe that this is not true. If you look at slide 17, the rise in property prices comparing to 2003, if you compare this against rise in income earnings, this will result in a very different picture. So can we have an analysis into this? Say the real income earning growth, if we have one chart and we compare this with this chart, I don't know whether the situation will be different. Mrs. Chen. Now for the affordability ratio, it seeks to look at the long-term affordability of housing. Now the figure is 50. It seems to be quite low, but actually it is not. That's because the interest rate is close to zero. And against this backdrop of ultra-low interest and rate environment, the affordability ratio is therefore 50%. If interest rates go up, then the situation will be very different. This figure 50 actually reflects the abnormal environment, that is the ultra-low interest rate and influx of hot money. And like Eva said, if interest rates goes up by 3%, the affordability ratio will rise to 65%. That is, if you earn $10,000, you'll be spending 65% of your pay on mortgage payments. So, in a way, it shows that the pressure on mortgage payment is quite high. In 1997, in the second quarter, the interest rate was 9%. Now, the interest rate is just, for mortgage, is just 2.2%. So the housing affordability ratio appeared to be low, but in fact this is not, Mr. Ronnie Tong. I am concerned about the difference. Well, FS, you have been in office for a number of years, and the gap has remained wide. There hasn't been any improvement. Inflation rate for 4.5%, but real income earnings growth in real terms 1.7%, and the index growth 2.3%. So income growth is not catching up with inflation. How can you address the livelihood issue for the people? Next, you have also set out a chart on the prices of property. But this is not the working class is concerned about. They're concerning about the making ends meet. As for movement in rentals, in slide 26, on the left-hand side, the retail sales volume grew by 5.8%, but for shop rental costs, it rose by 14.3%. Now, for the chart on the right-hand side, for real gross GDP, it's 1.3%, whereas for fresh letting, residential rental, and office, they grew by. For office rental, it rose by 8.5%, and fresh letting residential rental 6.5%. So the working class is struggling to make ends meet. They can't even pay for traveling expenses, etc. So for the widening gap, now for the chart, why aren't you listing out the office rental increase as well? If you don't control the prices for commercial properties, I believe that the gap will continue to widen. FS, now you have been in office for a long time, and there hasn't been any improvement at all. So shouldn't you roll out measures to improve the situation once and for all? FS. Now, I've explained several times before that there is a difference between nominal growth and real growth. For income earnings growth in real terms, the medium growth is 5.1%. For the average earnings of the full-time employees in the lowest decile group, the growth was 5.2% in real terms after discounting inflation. As for retail shop rental costs, well, we know that there is actual support or demand, and shop rental is adjusted along with the economic cycle. So despite the fluctuations in shop rental costs, it is supported by real demand, but we will closely monitor the situation. On the one hand, we will increase supply, and last year there were 7 sites, commercial sites, covering 300,000 square meters. And this year we still have 4 sites to be rolled out, and in the long run we believe that for commercial sites supply is adequate. I'll queue up for the second round. Mrs. Regina Yip just left, so Mr. Jeffrey Lam. Thank you, Chair. The administration recently rolled out measures to stabilize the property market. I think that they're not tackling the problem at source. We hope to see the property prices being stabilized, but on the whole, the solution should be increasing land supply. So how should we make use of land? We must build more units as soon as possible, of course. But in terms of cost, well, unless we do not have to pay premium, I think that the construction cost is something for the administration to consider, because the construction cost per unit is $3,000 or $4,000, comparing to the construction cost in the mainland is just several $100s. So there is already a wide difference. If there are so many property projects and infrastructure projects, I think the administration should consider relaxing the scheme for importing construction labor so as to lower the costs. Now, the economy in the mainland has picked up its growth, whereas for Europe and US, the economy has remained sluggish. Now, whether the U.S. economy is recovering or not after the Thanksgiving sale, it has yet to be seen. As for the exports in Hong Kong, the situation is still dire. Well, we talk about influx of hot money, but for SMEs, they do not benefit from it because the hot money just comes in for speculative activities. They're not there to help SMEs, and this will pose an increase in the cost for SMEs. So, what measures does the administration have in helping SMEs? The SMEs are craning their necks to wait for new policies. So I hope the administration could tell us as soon as possible what measures can be introduced to help SMEs. For example, the Hong Kong Mortgage Corp's scheme for the loan scheme for SME will expire in December, and that's a guarantee scheme. And the SMEs are concerned about the cash flow problems, and they also hope that profit tax can be there can be tax rebates for profits tax this year, so as to address their cash flow problems. I agree with Mr. Lam that in terms of the property market, we should tackle the problem with supply-side measures, that is to increase land supply. For Europe, they've gone into recession, and the U.S. economy is recovering at a very slow pace. And for these two traditional markets of our export sector, because of their economic situations, exports of goods and services to these countries have also moderated. And we have also, therefore, rolled out a number of measures to help SMEs, including the enhancement of the SME financing guarantee scheme, and we have also provided some measures to help SMEs under the ECIC, and we have also introduce measures to waive the levy and also registration fees for 1 year. And we will continue to keep watch of the situation and see how we can do more to help SMEs business environment. Because SMEs is one of the major source of jobs. Now, other than Mr. Lo Wai-king, who else would like to speak? Please raise your hand. I'll draw a line here. Mr. Chen Kam Nam. Thank you, Chair. Now, over the past few months, the external economy has remained unstable. So it is quite good for Hong Kong to remain stable. The unemployment rate currently stands at 3.4%, more or less. And this is, again, quite good. For those aged 30 or below, the unemployment rate is relatively higher, and that's for fresh graduates of universities and secondary schools. In certain sectors, I understand that there is still a shortage of labor. For example, airport services, airplane repair and drivers, for example. These are skilled labor, but they do not need high academic qualifications. So does the administration intend to introduce training schemes so as to attract people to join these sectors? Because, well, one category is low-skilled, low-income jobs, and another category is this category. So will the administration do anything to help ease the shortage of labor?
Secretary, Chairman, Mr. Chan is correct. The unemployment rate stands at 3.4%, which is a little higher than the low of 3.2% a few months ago. I believe there will be pressure for the unemployment rate to go up. In the past year, internal demand has remained strong. So locally, in industries like retailing and others, they are still performing well. And so unemployment rate has been kept at a low level. However, there is pressure for the unemployment rate to go up. And we would not rule out the unemployment rate going up in the future. We are aware that we have to work on different fronts. You may remember that in past budgets, we have implemented measures to help people join the construction industry. We see a shortage of labor there. And construction expenditure has risen from the average of 29 billion in the past, rising to 60 billion or 70 billion this year. And construction wages are going up. We are still cooperating closely with VTC in order to roll out courses for blue-collar workers, including aircraft maintenance and repair. Recently, we have successfully signed an agreement with Boeing that more R&D would be done in Hong Kong. We hope that there will be more jobs in this respect as a result. Mr. Lam Tai-Fai, thank you, Chairman. Secretary, you are here together with the government economist, and both of you have emphasized time and again that because of the euro debt crisis and also the looming U.S. fiscal cliff and also the political situation in the Middle East. There have been shockwaves sent throughout the world, and also the financial markets are volatile. In other words, there is uncertainty in the global market, and Hong Kong cannot be the only one not affected. You said that the administration will be closely watching the global situation and make strategies. Today, Secretary, can you tell me in more concrete terms, what is the administration doing? What kind of strategies are you thinking about so that we are reassured and so that we can assess whether your work is well done? And also, Secretary, you emphasized again that you would advise them, given the bad shape of the economy, they must be mindful about their affordability when they want to buy property. But, Mr. Secretary, this is just a platitude. Whether the economy is good or bad, when people want to buy property, they always have to be watchful about their own affordability. So what you say doesn't amount to much. So I'd like you to give them more concrete and scientific data so that they can assess whether they want to join the property market. For example, the affordability ratio, at what level should it be before people want to buy property? And also in certain districts, the property index should be what? Like in North District, Fanling and Tuen Mun, and also how much or by how much should the interest rate rise before they should stop thinking about buying property? So when you say talking about their own affordability, I think that is very hollow. Secretary, thank you, Chairman. The first part of the question. In the past few years, we can see that the global economy indeed has suffered from a few rounds of shockwaves. Our main strategy was that at the level of the macroeconomy, we have done some work. The main thing is to ensure that there is stability and robustness in our financial services. From time to time, we talk to banks and brokers in our stock market. We do stress tests with them. If we should find that the situation is taking a turn for the worse, we would still be resilient. And that there shouldn't be any adverse impact on our economy. On the other hand, as I said, in February next year, or actually this year, when I announced the budget, I talked about expenditure, infrastructural projects, and one-off relief measures. I did put out a big basket of measures so that the economy was lifted by 1.5%. And now I'm here to listen to your views about next year's budget. I will continue to listen to you. As for property buying, well, I always say that you have to be watchful about your affordability. By that I mean you have to analyze the situation. The interest rate is standing at a low level, and if you want to buy property, you should not just look at the present, and that is whether you can repay mortgage installments. But also, if the interest rate will go back up to a normal level, whether you can continue to afford the payment of mortgage installments. Now, of course, if this situation worsens, you also have to see whether you can keep your job. You have to know your own income stability and also your own affordability. Wang Ting-kwang, Chairman, we all know that the U.S. economy plays a central role in the world economy. We know that very well. In the PowerPoint of the Secretary and the Economist, it is mentioned that there may be a fiscal cliff in the U.S. Do you think the U.S. has ways to tackle it? What is your view? Secondly, you say that there could be the triggering of another wave of volatility in the global economic market. What basis do you have for saying that? Wouldn't that scare off investors? And what preparation do we have to make? Secretary, Chairman, the fiscal cliff is an interesting matter. The choices that are to be picked would have to be paid for. Let me tell you the background. According to their law now, there are many tax breaks which, well, I'm talking about the US, which will come to an end by the end of the year. And also, at the end of last year, it was endorsed that expenditure cutting should also become effective in January next year. If the US Congress cannot do something within this month, that is before the end of the year, and that is to pass an amendment act, then the tax breaks will all be cancelled by the beginning of the year next year, and taxes will go up to their original level. And we are talking about 450 billion US dollars. And the debt cutting mechanism will also cut government expenditure by about 50 billion US dollars. If we look at the Congress Budget Office and their assessment, if they fall into this cliff, well, that means that they will be able to control the deficit. And the deficit will be reduced by 490 billion US dollars in a year. And in the next 10 years, the national debt and GDP will be reduced from 73 to 59. Now, since there will be less expenditure and more taxes for the government, then in 2013, the economy of the US will be shrunk by 0.5%. This will affect the US as well as ourselves. Since there is a shrinking of the US economy, the unemployment rate in the US may go back up to 9%, which is a high figure. However, if you look at it from another aspect, if there is consensus, well, actually, I believe that they will reach a consensus. But what shape that consensus will be in, it depends on them, and so they will not fall into the cliff. And most of the tax break measures will continue. That will provide some stimulus to the economy in the short term, and it will benefit us. And we expect then that in 2013, the U.S. economy can grow by 1.7%, which is good, and the unemployment rate will remain below 8%. However, the price to pay is also huge. The national debt will go up. And that is by 2022, national debt will take up 90% of the GDP. So they really have to judge whether that is the price they're willing to pay for short-term gain or reward. Mr. Wai-king, talking about the long-term development of the Hong Kong economy, the administration will always talk about knowledge-based economy. In 2009, innovative industries has been listed as one of the industries where we have an advantage. However, the administration has done little to help these industries. In 2010, R&D only took up 0.76% of GDP. The industry has been saying that there should be more R&D expenditure for the public sector, and also there should be more collaboration between officials, academics, and business. In fact, many countries and regions have adopted this method, and that is R&D expenditure invested by the private sector will be the subject of tax breaks to the tune of 200%, 300%. In this respect, in the election platform or manifesto, the CE mentioned that point. I'd like to take the opportunity to ask the question whether there will be a concrete plan in the near term whereby there could be a tax break for R&D investment by the private sector. Secretary. Thank you, Chairman. creative and innovative industries mentioned by the member. Well, the total input in Hong Kong, well, it is said that it is at 0.06% of GDP. Well, we have taken an in-depth look into this. The 0.76% is actually, or basically, government investment. We now lack input from enterprises. We hope the private sector will invest in R&D. Right now, the tax break is 100%. So we are waiting for the private sector to make their input. Well, we also would analyze the situation. Actually, in the budget in the year before last, I think I wrote out some measures to give refund directly to people who invested in R&D, because I understand that SMEs take up the chunk of our enterprises, and actually 90% of our enterprises do not have to pay any tax. So if we still give tax rebates, these people are not going to benefit because they don't pay tax, and therefore the measure was to have a cash refund directly for investors. We believe that is more appropriate. Mr. Kenneth Leung. Thank you, Chairman. Sorry, I was at the meeting of the PAC just now. If I could refer to the slides, the fiscal reserve is now standing at $660 billion. Sorry, we are not at the budget yet. We are still at item 1. Sorry, I was not at the meeting just now. Okay, my question for the Secretary is to pursue the issue of Hong Kong's long-term development. Some industries, say for example, transportation, we should not only look at land but also the air and the sea. In the past 10 years, cross-boundary plane rental and also vessel rental, that has gone down by a wide margin. And recently, the CE said that Hong Kong could well become an international intellectual property registration center or hub. So in your next budget, Secretary, are you going to change tax requirements so that there could be tax concessions, so that there could be more rental of our airplanes and vessels, and also the IP registration system can be improved?
FS. Thank you, Chair. We are very concerned about the development of transportation and logistics sector. The logistics industry is one of the pillar industries in Hong Kong. It has also provided various job opportunities for people. And as we're preparing the budget and the policy address, we're at the public consultation stage, and we'd like to seek more views from members on any concrete suggestions. All right, finally, myself, I have a question for FS. Just now, members talked about the soaring property prices. I'd like to talk about increasing rentals. Now, for those without a property, they need to pay rent to have accommodation, and for business operators, they need to pay rent in order to do business. And even for taxi drivers, they complained of increasing rental as well. For business startups, it's even more difficult for these entrepreneurs to find suitable shop space. In relation to rentals and operational costs, have it risen to such a ratio that is not reasonable, and only large enterprises can operate. And for rentals, because many people do not own a property, they do not live in PRH housing either. So what's the impact on this group of people? And for the rising rentals, do you consider that the increase has surpassed the affordability of people and the business operators, and are there any relevant measures to stabilize the increase in office rentals? And do you have any incentives to encourage developers to build underground shopping centers or underground cities like many other countries? And are there any measures to encourage more lands we released in the industrial sites for commercial and business use? Well, thank you. I think I need at least an hour to answer your series of questions. In terms of the property market, we've also noted the rise in rentals. On the one hand, it affects domestic units as well as the office space required by SMEs. In relation to commercial land, recently we have increased supply. Last year we had 7 sites, and this year we have 4 sites on the application list, and we will increase supply of land for business and commercial use. Now, as for rentals, they are in line with the economic cycle, and there is real demand. And over the past period, because of the robust retail sector, retail shop rentals have also increased accordingly. So over the past few years, as far as retail is concerned, starting from the third quarter of 2008, it has risen by almost 60%. And during the same period, shop rental have also increased by 30%. So there is a correlation. As for office space rental, it has also increased, but the trend is tapering. For the first 9 months of this year, the increase was just 6%. So the trend is different from the previous upward trend, and we hope to continue to increase supply to ease the pressure. FS just one response. Now, because the retail turnover has increased by 60%, but the increase in commercial and business land have risen by less than 60%. So you should consider increasing land supply, for example, to make use of existing commercial land and see whether more sites can be released for business and commercial use. Next, I hope that you can report to the LegCo your internal analysis, the affordability in terms of people's income and rental. Mr. Ronnie Tong, I'll give you 2 minutes for second round. I'd like to clarify with the FS, does he feel that there is no such gap as I mentioned? That what is the gap you are talking about? The gap means the increase in the earnings of the grassroots people and the mortgage payment, and also the rise in retail and office space and the overall business costs. But according to your answer, it seems that you do not find any problem in that. So are you saying that there is no such gap at all, FS? No, not that there is no problem, but over the period, there is actual income growth in real terms. But this is what you have put forward. For the wage index increase is 1.7%, inflation 4.5%. So is there a difference or not? Yes, there is a difference, but I'm talking about after discounting inflation. Mr. Tong, let him please let FS answer. As I understand, this is the figure after discounting inflation. All right, so after discounting inflation, what about the property prices for office premises and rentals? Like I said just now, these figures also reflect the real economic situation. In particular, for the growth in retail sector, like I said, it amounted to some 60%, and for the rental increase, it was some 30%. So that reflected the actual situation. Chair, I'm not asking the FS about the actual situation. I'm asking what should be done to address the actual situation. Well, I think Mr. Ronnie Tong actually is talking about the same point. That is, what concrete measures can be rolled out to rein in the soaring office rental so as to ease the pressure on SMEs. I still don't understand why is it that 5.1% minus 4.5% equals 1.7%. No, it's not calculated in this way. Helen, would you explain? Now, actually, for 5.1 and 1.7, the difference is the increase in inflation. If we talk about the inflation over the past year, in June is slightly over 3%. So you're adopting a lowering figure. Now, the nominal inflation means that if it's 10,000, then after increasing it by 5.1% is $10,051. But now, after discounting inflation is 1.7%, so it is actually the figure after discounting inflation. We're not just concerned about any increase in income earnings. We want to see if the income increase can catch up with inflation. It has to do with the purchasing power. So we don't usually just talk about the nominal growth. We talk about real growth. And this is the growth after discounting inflation. And in the third quarter, the median earning after discounting inflation is 5.1%. As for the average earnings of full-time employees in the lowest decile group, after discounting inflation, the increase in real terms is 5.2%. Okay, so much for this item. Next item is the 2013-14 budget public consultation. I have invited all members to take part in this in the discussion of this item. Okay, we have a short break. Okay, let's break for 3 minutes on FS request. Members who are interested to speak, please raise your hand so that our clerk can keep a record. Let's